What's up, everybody? My name is Ale, and welcome to my world of stocks. By the way, I'm recording this on Friday night. It'll probably be uploaded on Saturday morning, but I just wanted to give you guys a quick little update because my number one largest stock, which as you guys know is Disney, broke out today and it reached a new record high, climbing above $130 per share. And that's actually pretty significant because for many years, the stock has been sort of stuck in this trading range of around $100 to $120 per share, and it's been very difficult to break out of it, so this does mark an important move for the stock. Now, it remains to be seen whether this rally will continue or if the stock will dip back down, but the great thing about Disney is that it's one of the most solid long-term investments in the market. If you look out 10 years into the future, there's very little doubt that Disney will be a much bigger company because they have such incredibly strong brands and IPs like Star Wars, Marvel, and everything associated with Disney and Pixar, and now they even have all of the newly acquired 21st Century Fox brands like The Simpsons, X-Men, Deadpool, and a number of other hit shows and movies. And then on top of all of that, Disney still has all kinds of world resorts, and they even own their own cruise line, so it's really a giant corporation that is well diversified and isn't at any risk of disappearing. Now, the reason why the stock took off today is almost entirely due to them releasing new details about their new video-on-demand streaming service called Disney Plus, which investors are hoping will be a formidable competitor to something like Netflix. However, I don't really see them needing to dethrone Netflix, as I believe there is plenty of room for a number of different streaming services out in the market, and as Disney announced on Thursday during their Investors Day, the new service will be extremely affordable for almost all types of consumers when it launches in November for only $6.99 a month. For comparison, Netflix is actually much more expensive as their price ranges from $8.99 to $12.99, and if you want 4K content, then the price increases to as much as $15.99. But it does also look like Disney will be offering 4K HDR where it's applicable, although I'm not sure if that would increase the price, but I haven't seen any mention of that, so maybe it's just a free added bonus with the subscription. In any case, the new service will be available on smart TVs, web browsers, tablets, smartphones, and even gaming consoles, which by the way includes the Nintendo Switch, and I thought that was kind of weird because even Netflix is not available on the Nintendo Switch. I think they have Hulu, but they definitely don't have Netflix, so it's kind of funny that they're getting this new service before they even get Netflix. But it's also going to be available on Roku, Apple TV, and Chromecast devices as well. And a really cool feature is that you can actually download and play all of the content you want with no restrictions on any of the platforms they mentioned, so this is actually looking like a pretty damn good deal. Being able to watch Star Wars and Marvel content on the go wherever you are, that does definitely sound appealing to me, but also just kind of as an investor, I like this idea because I can definitely imagine a lot of parents wanting to download a lot of family-friendly content, a lot of Disney's shows and movies onto their phones and their tablets, and then that way they can use that to keep their kids entertained whenever they're outside of the house and going on trips and different things like that. Now, that might not be the best parenting, but as an investor, I do kind of like the idea. And when you think about it, most people use the $12.99 plan on Netflix, but Disney even has a yearly membership that costs just $70 a year, or it comes out to about $5.83 per month. So that's less than half the price of Netflix. That's pretty crazy because anyone who already has Netflix can easily afford to add Disney Plus for just about $5 more, and even if they don't have Netflix, then they can still be easily persuaded to try Disney Plus because it's so affordable and has brands that both kids and adults love. And again, even if they already have Netflix, I can think of so many dedicated Star Wars fans and Marvel fans that would easily be willing to shell out another $5 to get all of that Star Wars and Marvel content that they love. But that ultimately leads to how sticky the service will be. And I think Disney is focusing heavily on this aspect of customer retention. To make sure viewers are satisfied in the first year, they're giving you over 100 recent movies, over 400 catalog movies, and over 7,500 TV episodes with over 25 new original series and over 10 new original movies. And by year 5, those numbers will increase to over 50 original series, still over 10 original movies added every year, over 10,000 episodes, over 120 recent movies, and over 500 catalog movies. And to make sure that the content is robust, they're including 44 blockbuster hits from 2006 to the present that have now generated over $37 billion in cumulative box office revenue, or close to $1 billion each, with all new releases going forward being added to the service as well. But going back to year one for a second, it will include every single Star Wars movie in existence, most of the Marvel movies with more being added in the future, tons of older catalog movies like Pirates of the Caribbean or Maleficent, all the classic Disney cartoon movies like The Little Mermaid or Lion King or 101 Dalmatians, even more Disney movies like Big Hero 6 and Frozen, everything from Pixar like Toy Story, The Incredibles, and Finding Nemo, tons of National Geographic content, all new releases like the new Aladdin movie, the new Avengers movie, new Toy Story, the new Maleficent, the new Lion King, and Frozen 2, and they're even throwing in the first 30 seasons of The Simpsons, which they did acquire from 21st Century Fox. And that's just the content that has already been created or will be created regardless, but they'll also have exclusives to the platform like 2 new live-action Star Wars shows, with The Mandalorian being available at launch, a new Star Wars cartoon show, new Marvel movies featuring Loki, the Falcon, Winter Soldier, Scarlet Witch, and the Vision, and they're even making Marvel cartoons as well. Needless to say, the platform is likely to do extremely well thanks to the premium content being offered at a very cheap price. And Disney is already estimating that they'll reach 60 to 90 million subscribers in the next 5 years, with their other services seeing tremendous growth as well, like ESPN Plus growing from 2 million subscribers today to 8 to 12 million by 2024, and Hulu growing from 25 million today to 40 to 60 million by 2024 as well. And they'll also be offering all 3 services for a combined discount, making the entire lineup even more attractive. To my knowledge, ESPN Plus is only around $5 and Hulu is somewhere around like $12 without commercials. So if you can potentially get all 3 for around $20, that would be an amazing deal, because you'd have all your sports, all your family content, and all of your mainstream adult content for one affordable price. Now, obviously, all of this growth is going to translate to very high revenue growth, but it will also mean a very sharp rise in costs. Keep in mind that their new original movies and TV shows will have huge budgets ranging from $25 to $100 million, and their Star Wars Mandalorian show alone is expected to have a budget of $100 million. But the good news is that Disney does expect all 3 of these different services to at least be profitable within the next 5 years, despite the higher costs. Disney Plus is expected to become profitable by 2024, Hulu by 2023 or 2024, and ESPN Plus by 2023. So no matter how you slice it, I think that Disney is, by all accounts, a very long-term play, and that's really how I think everybody should be looking at it, because in the short term, anything can happen. We're also going to have to deal with higher costs that could weigh down on profitability. Who knows how much that hurts the stock, if it does at all. But I think we're also going to start to see revenue growth over the coming years. Again, Disney is investing very heavily in their future. They're tackling the video on-demand streaming market, which I think is just going to see even more growth. And we're also going to see subscriber numbers climb year over year. Keep in mind, they're not even launching Disney Plus until November, but once they do and they start reporting subscriber numbers, Wall Street loves that. Wall Street will eat up subscriber numbers, and because they're starting from scratch, you're going to start to get huge year-over-year increases in subscribers. So I think that will probably propel the stock a bit more too. And it's also evident in the fact that they think subscriber numbers are also going to climb for ESPN and Hulu, because I think they're expecting a lot of people to kind of double or triple dip into these different services and maybe bundle and get a discount. So all of that sounds great. However, the one issue that I do have is I don't like the fact that they're restricting content to Disney Plus and Hulu, and they're not really putting adult content on Disney Plus, because, for example, there was no sign of Deadpool being on Disney Plus, and I doubt that Deadpool will be on Disney Plus. There wasn't even X-Men either, which I think was kind of strange, but maybe X-Men stuff will be added in the future. But I think that a lot of the 21st Century Fox assets are really going to be shoved onto Hulu. Now, on one hand, that does definitely help Hulu, and it makes Hulu look a lot more attractive, but it's really Disney Plus that I care I care about both, but I really care about Disney Plus because of Star Wars and Marvel. So if you were able to combine Hulu and Disney Plus, maybe at a discount. Keep in mind, Hulu costs about $12 a month. Disney Plus costs about $6 to $7, depending on the plan you get. but maybe they combine Hulu and Disney Plus. Maybe for a year membership, it averages out to about $15 a month. That would be extremely attractive, and I'd much rather have Hulu and Disney Plus for about $15. I'd much rather have that over Netflix. Whatever Netflix offers, I'd much rather have it over Netflix. And I know that a lot of you are invested in Netflix and you like their content too, so I don't mean to talk trash, but I really lost like all interest in Netflix. I mean, I actually canceled my Netflix account because it just got really boring. I found that all the content I was watching was licensed anyway, and I've been trying out other services at the moment. Also, keep in mind that Disney, now with the acquisition of 21st Century Fox, and AT&T with the acquisition of Time Warner, they're going to be pulling all of their content off of Netflix too, which leaves Netflix with even less content. They got to produce more original content, and they have proven that they can do that. Stranger Things, Black Mirror, Bird Box, those are all very popular shows and movies, but I don't know if it's enough to compete with something like Marvel and Star Wars and all the Disney brands and all that kind of stuff. I don't think it's enough to compete. So in either case, I shouldn't say compete. In either case, I do think that they can all compete in the market, but I am still more hopeful for Disney. I'm just really hoping that they offer a good price for a combination of something like Hulu and Disney Plus. I think that's where a lot of the potential lies. Still, a lot of people ask me, when am I planning on selling out of Disney? Right now it popped a lot. Am I planning on selling? I don't really like this question because Disney, for me, I'm a long-term investor, but even more so with Disney, it's a really long-term investment. I probably don't even plan on selling until maybe I retire, unless something changes with the company fundamentally. But at these levels, I'm not necessarily adding to my position, but I'm very comfortable just collecting my dividends. And on any dips and pullbacks, when I think the price is cheap, I definitely add to my long-term position. Now, at the moment, their trailing and forward PEs do look a little high at almost 18 and 19 respectively, and their PEG is very high at almost 7, but that's probably due to the increase in cost as they build up their new segment. And when you look at their highest PE in the last 5 years, that was at around 23 back in 2015, so they are still a bit lower than that, and compared to Netflix, Disney looks like a much better value. Keep in mind that Netflix is way less diversified, and they still command a pretty high market cap of over $150 billion with a trailing PE of over 130. That does improve drastically to around 55 forward thanks to their high growth. But if I was invested in Netflix, I'd be really worried about their future growth rates as more companies like, again, Disney and Fox and AT&T and Time Warner start to pull their content off of Netflix and use it for their own streaming services. Another benefit to owning Disney, though, is that they are paying a growing dividend that has almost a decade of growth, with almost a 15% 5-year growth rate and a very good payout ratio of just 26%. The yield is a little low at about 1.5%, but that yield is actually much higher for me personally because I have bought the stock at much lower prices. Still, with all the volatility in the market right now, I expect it to continue. I think we will see dips with Disney, and that's probably where I'll be adding to my position. But if it continues rally, hey, it's my number one largest stock, so I'll still benefit from that either way. But let me know what you guys are doing with Disney, if you're buying it, selling it, holding it. I'd love to hear your thoughts. And also what your thoughts are on Netflix and any other company. I'd love to read it down below. Thank you so much for watching. Hit the like button if you did enjoy this. Subscribe if you haven't already, and I'll catch you guys in the next video. Take care. Bye-bye.